Good morning, welcome back. You're watching NDTV Profit. We have with us now the management of Bank of India. We have Rajneesh Karnatak, who is the Managing Director and CEO at Bank of India. Welcome, sir.
Thank you so much.
Right, we're going to try to break down the results for our viewers, sir. First off, I want to try and understand what's happening with the margin trajectory. We've seen margins erode by 40 plus basis points over the year, but this quarter has been where the knock clearly is. 23 basis points down, 0.23% lower on margins, now at 2.85%. So two questions: what's causing this impact? And second, where do you see this go in the Q4 as well as in H1 FY25?
Yeah, so there has been definitely some pressure on the margins, as you rightly said, because of the fact that there is a liquidity tightness in the system. And if you see the RBI data also, as on January, the credit growth on a YOY basis is around 20% and the deposit growth is around 13%. So there is a gap of around 7% on the incremental accretion in the deposit. So definitely that is creating some liquidity pressure and the pressure on the deposit, because of which the margins is under stress. So as regards our bank is also concerned, so the margins were in pressure on the sequential basis if you see from September to December, because there was some high cost of increase in the deposit during the December quarter. But on a 9-month basis, if you see our margins, if you see our net interest income, there was an improvement in the net interest income and the margins on a 9-monthly basis. So margins, we are trying to protect the margins as much as possible. So March 24 guidance, as far as it is concerned, will protect the numbers on the margin side as there were the numbers of the December side. So if you see further, our NIMs were at around 3%, 2.95% on a 9-monthly basis for the global NIM, and for the domestic it is well above 3.25%. So we'll be able to protect that also. And on the international side, it is also at around 1.25%. So overall, we are saying that we'll be able to protect the NIM for the March 24 quarter, basis the numbers which were there in the December 23 quarter.
Understood. And you're largely attributing this to deposit cost of deposits going up, right?
So just to elaborate on that, if you see the latest data which is there on a AAA NBFC, when they are raising fund, a 1-year fund, the cost has gone up to as high as 8.6%. For a AAA NBFC on the corporate side, the 1-year CP is going at around 8%. On the CD side also for the bank, the 1-year CD is going around at 7.9%. So clearly the cost is going up because of the tightness in the liquidity in the system presently which is there. But we do not foresee this liquidity to be there once the March is over. So the Q1 of FY25, there should be more softness in the liquidity and softness in the rate of interest also. So what we feel personally is that the rate of interest, whatever it is, has plateaued now at the level of December, and it would continue to remain at this level till March, after which it would soften.
Understood. So if I can just round that off by asking you, your cost of deposits now have, or your deposits now have largely been repriced fully, and therefore you are quite comfortable with regard to this margin being stable. Is that the best way to put it?
Now the deposits have all got repriced. If you see our franchise, if you see the data for Bank of India, so on the domestic side, 44% of our deposit is CASA deposit, which is CA and SA, and the remaining 44% is retail term deposit, which is as per RBI guidelines up to 2 crore. And we have bulk deposits of only 12% of our total domestic deposit. So that way, whatever is cost of deposit for us as on December is more or less repriced, and the cost of deposit should normalize now and stay at the same level. I would not say that it would go down, but it would stay at the same level for Q4.
The other piece I want to try to bridge is to try and understand where your Opex currently stands at and where should it go from here. Was there a largest impact one-off this time around with regard to a provision for wages? Is that what has caused the knock on Opex? Could you give us some perspective there?
Yeah, if you see our operating profit, we have touched 3,000 crores of operating profit in Q3 this financial year. So sequentially it has come down, and from if you see on a YOY basis also it has come down. However, if you see our 9-month number, our operating profit has improved by around 14%. So as regards the reduction in the operating profit of this quarter, basically there are two items in it. One item is with respect to, as you rightly said, on the wage revision side. 483 is the provision which we have done in this quarter for the wage revision, which includes a wage revision incremental of 2% from April till December, because we were providing at the rate of 15%. So now since the MOU has been signed at 17% for the wage revision, the incremental 2% we have provided. That is one piece. The other piece being the provision for the Q3 on the wage revision side. So aggregating 483, which also includes the pension provision. So this is a one-off item which has been provided in this quarter, 483 crores. Apart from that, around 380 crores of provision has been done with respect to depreciation in the investment which has happened in one of the performing investments, which is with respect to the resolution which has happened in one of the NPA NBFC. So there are 2-3 accounts in that. So that is around 380 crores. So total being around 800 crore plus. So being this one-off item, if you add back 800 crores to the 3,000 crore of net operating profit which we have made, so we come back to the 3,800 crore level of the operating profit. So this being one-off item, there should not be any much of pressure in the Q4 coming forward. As I said earlier also, we have improved our operating profit on a 9-month basis by 14%.
Right. With that, thank you so much, sir. Mr. Karnatak, it's been a pleasure speaking with you. But with that, we're completely out of time on this edition of the Small and Mid Cap Show. Of course, stay tuned to NDTV Profit. We'll get you all the news first. On the other side, we have more, with regard to companies. Stay tuned to NDTV.